Hey everyone, welcome back to the Mark Loeffler Experience. We are going to do another market update today. Well, and I just want to know, obviously if you read the newspapers and you're following the news, you're going to tell me that the market's going to crash by another 25%. Because that's what they're saying. That's basically the headline out there. Market going to crash by 25%. But we're just going to pull back the curtain here. And again, some of this is anecdotal from my experiences. Some of this is going to be what the stats say on the old computer here. But yeah, we are going to see 25% year over year decline in December maybe, but definitely in January and February because again, they went up 20-30% in the matter of 2 to 3 months, which again, we all knew was unsustainable. So we will see that. That will happen. But that's a thing in the past. That is not, like, it's easy to predict that right now. 100% easy. Because we know we're already down that much from the peak. Do we have another 25%? I doubt it. Are we at the bottom? That's the big question. Are we at the bottom of this real estate crash? Well, let's just look at a couple things here. Okay, we're fairly certain, right? We're certain that the Bank of Canada is going to raise interest rates next week. That's going to happen. We're fairly certain it's going to be 3/4 of a point. If it's not 3/4 of a point, it's like 100% half a point. Right, we get that. So that'll take the interest rate. So that'll take our interest rate to 3 to 3.25 on a variable. And what happens then is, and I know this is going to happen to a lot of people, and a lot of people I know, a lot of investors, is that their interest rate is going to make their payments reset. So they're basically going to go into negative amortization on their loans. So they're paying more than 100% interest. There's actually money being added onto their loan every month, so they're not paying down anything. And so banks will come and say, listen, that's not our business model. Our business model is that you pay a heck of a lot of interest, but you also pay down your loan every month. So therefore, we're going to reset payments. So that's going to happen to people. You will get reset payments. It's just going to happen. If you didn't want that, you should have locked into a 5-year. I'm still variable on, I would say 70% of my properties. And I'm still loving it. Like, I made out like a bandit when I was paying 90% of everything I paid towards the mortgage rather than a piddly little amount. So now my mortgage amount is so far down that I think I'll be okay, even if I go to negative amortization, which I probably won't. So we are getting that. That's happening. So back to, are we at the bottom? Let me know. I know some of you maybe think yes, some of you maybe think no, but I definitely want you to comment down below and say that, because I just look here and I'm like, okay, we all understand that mortgage rates are predicated, the fixed rates are predicated from the long-term benchmark bond yields, right? And we obviously peaked in June at 3.4%. And now, so all through August, they are pricing in a recession. So that's why long-term bond rates would fall, is because they think Canada is going to go into a recession. They just don't know how long and how big it's going to be. And so it's inching back up and to that 3% mark. So you can come here and see all the way through August, it's been in the twos. And it's kind of inched back up because the economic reports have been, pretty good. Job reports, wage growth, discretionary spending is still high, not on goods, but on services right now. Although restaurant sales fell last month, which, guys, get out to my restaurants and eat, okay? Bella nice. All right, but, and then you can see, all right, well, we had in January last year, December, January. This is what caused that spiking housing, because people were getting mortgages at stupid rates. Let's just go, this is the 3-year. So you saw June 2020, right? long-term rates. Like they thought basically the market, the economy was going to fall off a cliff. All right, so let's see what's happening. So anecdotally, our listings we're getting more showings on our listings. We're seeing some competition in buying homes right now. We were involved in one, and we were in competition. There was only 2 bidders. We sold one this week in competition, and again, there was 2 bidders. We probably could have had more, but they wanted to lowball and said, we're not in for competition and blah, blah, blah. But we could have had more. So, I mean, from that standpoint, it kind of feels like we're, if not at the bottom, because I'm never going to try to call a bottom. We are definitely leveling off. Like we're not going to see this. Okay, what's this? Let's call that $1 million to, it's a 4% drop. Boom. To another 6% drop to a, 4% to a, 7%. Like, I'm not expecting that. Like, we got here 780 to 760. So it's still a good drop. It's still like 2.5%, but it kind of feels like we're getting more momentum back in the market. Now, we always know that summer is a slower month, but we're going compared to summer last year and summer this year, maybe summer last year. And we did see a dip in prices last summer, right? Like here we are, we were 780, 764, 753, 752, and then we just went on that ridiculous run, right? So anyways, year over year, we're still up when we factor in all of it, so 1.2%. Hamilton's 2.8%. Kawartha Lakes, I'd look at that because that's where my cottage is still up 3.5%. So Oakville is up 10% still. Now this is this is a funny market. Like, look at this, boom, boom, boom. Like it's been, average price $2 million, average price 1.4. Now we're back up to 1.8. I think the truth is somewhere in the middle there. I don't know that we're up 10% still in Oakville, but again, you get 1 or 2 big houses that sell through the month, it really skews average price here. So I think we're going to look more like we're on this line at the end of the day, but that's what we're seeing right now. Realtors Association Kitchener-Waterloo is actually down year over year. Same with Barrie, down 4.6. Now, this does not represent all the sales in Barrie. Probably about 40 to 50% of the sales in Barrie are tracked on this platform. So not all of them. Burlington is down 0.7% year over year. Niagara Falls, 2.2%. Peterborough, still up 5%. I mean, it was one of the hottest markets out there for a long time. Like, Peterborough went from a average price of 414,000. Let's call this back in 400,000 to 800. So they had a 100% increase in a little over 3 years. So a little over 100% in 3 years, which is ridiculous, right? Like, that's, and they're still up. I mean, if you bought in 2019, you're still up over 50%. So you're still doing okay. I mean, if that's the worst of your problems, then you're doing okay. The board, there's 10,600 new listings, right? All of the board. All of the things that this program tracks, which is, again, not everything, right? I'm just going to put that out there, not everything. Doesn't track anything from TREB. I do wish that they would work together, but again, this is not going to track all of them, even if the board is on here, because some people don't list with the board. Hamilton, 621, up 12.7%. Kawartha Lakes, 3.9%. New listings. Let's see this, because there's some fun stuff, right? Like Oakville is only up 4%, probably why there's a bit of an increase in pricing. Waterloo, Kitchener, 10%. Barrie, up 40% new listings. That's massive. So when you see a spike in listings and the sales don't follow, you're going to get lower price because, again, more supply, same or less demand, people are going to have more options, so they're going to be able to negotiate. They're like, if I don't buy your home, I'll buy your neighbor's house. No big deal. Here we go. Burlington's up 40%. Niagara Falls 13.5%. And this is interesting. Peterborough's actually down 17.4% year over year. I guess in Peterborough, because it's close to cottage country, everyone just goes away in August, and they'll worry about that stuff later. So once we go back to school. All right, let's see homes for sale. So in all of Itso, 18,000 homes for sale, but we're off the little peak here. Look, like we're down a little bit month over month, and you look, and we're up 144% year over year. So last year at this time, let's see, August, 7,400, 18,000. It's a big number. Hamilton, 854, Kawartha Lakes, all up. In the 140, Hamilton's up 170% home for sale. So that adds pressure. Again, if they don't buy your house, they'll buy their neighbors, which we are seeing. Oakville up 215%. So things are taking longer. Our listings are down, but things are taking longer to sell. Kitchener-Waterloo, 190. Barrie, 290%. I think there's some pain to come in that Barrie market still. Homes for sale. Burlington, 194. Niagara Falls, 160%. Peterborough, only 130. So again, below average, which again is going to lead to not as many price declines. Again, supply and demand. They have, less supply than everyone else, but the demand is steady or, falling. But they still have less supply. And we're going to see that in sales probably. So sales year over year, all of it are down 32%. So our listings are up huge. And this is obviously why we're accumulating inventory on the market. And by the way, if you're priced right, we're selling stuff in multiple offer in days if you're priced right. It's the people who are sitting there at even April pricing or May pricing, and they're getting slaughtered. And they're just losing money month over month. You got to get ahead of this market. If you're going to sell your home right now or sell your property, you got to get ahead of the market. This obviously, Kawartha Lakes down 43, Hamilton's only down 30. So again, it's below average, but they're getting a lot more inventory coming on the market. Oakville's down 42, Kitchener-Waterloo's only down 16%, Barrie's only down 22%. So they are getting a lot more inventory on the market, but they are selling more homes than the average. Same with Kitchener. See, this is all just interesting, fun stuff. Isn't this just fun stuff? So Burlington, same thing, only down 15% for sales. Still lots of demand. Niagara Falls, 35. Peterborough, 32. So they're all below the Itso average. So in all of the boards that this is covered, remember this 18,000 current listed properties, there's 2.7 months worth of supply. In Hamilton, there's actually 2. So it's kind of gone down. Like we're seeing stuff either come off the market if it doesn't sell or, things selling. So there's 2 months worth of supply in Hamilton. That's still pretty tight. So Kawartha Lakes is in balanced market territory right now. And this is kind of why we look at this stuff, right? Like Oakville is 2 months. Kitchener-Waterloo still only 1.4, but that came down. We're going to see. I bet you that spikes next month when we watch this. Barrie seems to be leveling off. See, that's the thing. Like, you look at this stuff, and it's like, okay, the months of supply are leveling off. Niagara Falls is a little high. Peterborough's come down. And, that's a future indicator of what pricing is going to do. So, I don't know, guys. Again, I do not have a crystal ball. I know people come up to me when I see them and they say, I love it when you say that. I'm just a simple guy on YouTube making videos. So there you go. There's the line for you. I don't know what's going to happen, but it's feeling like to me that we are going to bottom soon. I don't know that we're going to see huge price increases, again, unless they trigger something with the interest rates. which I don't see happening. I think we're going to go through a mild recession. Time will tell, and we will be here throughout. Comment down below if you'd like a video to be made, or reach out to me on Instagram. Happy to chat with you. And yeah, we have our next meetups. Next one is September 19th. The one after that's October 24th, November 21st, and December 19th. We're going to have a little Christmas party. Appreciate you guys watching to the end. And if you haven't, definitely subscribe and like this video.